unfortunately, as the US economy moves more towards a rickety basis, and you hear this from great experts, I'll mention Larry Summers again, Ray Dalio again, people are calling for there could be some extreme things happening in the United States all the way to potentially civil war. As you read off kind of all those stats, I'm almost wanting to curse here on camera. I don't think any of those numbers are real. Larry Summers put out a research report, I think about 3 months ago, talking about inflation and just how we keep doctoring the numbers. And it's moved into the political sphere. So whatever you're hearing on a day-to-day basis on inflation did this or did that, I don't know what it means. Your dollar is going down, my dollar is going down. Get off the dollar.
Kitco News special coverage of Consensus 2024 is brought to you by Diamond Standard.
Hello, I'm Michelle Makori. This is Kitco News here in Austin, Texas, continuing our coverage of Consensus 2024. And I'm very pleased to welcome back Mike Belshe, CEO of BitGo. Mike, good to have you with us.
Good to see you again, Michelle. How are you?
I'm great. And Mike, last time you and I met was in September of 2023 at the Makori conference. And I'm going to recap what you told me back then because you were spot on, Mike. We chatted prior to the spot Bitcoin ETF approval. You said that it was a political delay, that all the regulatory work was there, but the political powers were delaying it. You said that it would be approved in 2024. You said that Bitcoin would then hit a new all-time high. And to remind our viewers, Bitcoin was around $26,000 when we started to chat back in September. So between the 25 to 30 range, and you correctly predicted that we will get a new all-time high after the spot Bitcoin ETF approval sometime in 2024, which of course we did, and that it would be approved. So now that you have such a solid track record, I'm going to be drilling you for specific forecasts today.
I'll try to do as well.
So let's take a step back. How has BitGo as a custodian received the spot Bitcoin ETF approval? Give us some background in terms of what you're seeing and your role in all of this.
Sure. Well, look, BitGo is regulated, qualified custodian. We got 2 licenses here in the United States. We got another 5 abroad in various countries as we build our global custodial network. So obviously we're handling some of the custody for existing ETFs. So the Bitcoin ETF, back when we last spoke, obviously it was a little bit unknown as to when it would come about. And the battle at that time was really about how do you just get an application through the SEC to approve this thing? It wasn't about who's custodying it. And the ETF applications, I think they go back to, I guess it would be Grayscale, maybe it was Gemini that filed some of the first ones, 2016, 17, it was a long time ago. So all of the folks that were trying to get an approval, and remember there was a graveyard of about 20 failed approvals, all eyes were on just how do you get through the SEC. So the first wave that we saw for Bitcoin ETF approvals mostly used Coinbase, not 100%, a couple went to BitGo. But the reason for that is simple. Coinbase, public company, already approved by the SEC in some way. And every large scale ETF wants to use multiple custodians. They want this for their own business reasons as much as anything else. They want pricing leverage and power. But that was not the concern. They were starting out at balances of 0 and they needed a custodian. So anyway, a lot of that went to Coinbase. As of today, there's more coming to BitGo. We'll have some announcements very, very soon on that point. As the Ethereum ETFs come on board, some of those are going to launch straight on BitGo. And the reason for that is because we're now kind of proven. We've kind of gotten through that initial, how do you get through the process? That's well known and understood.
We'll get to the ETH ETF and the surprise announcement there, but let's focus still on the spot Bitcoin ETF. So you're currently the custodian for which ones?
Valkyrie hashtags.
So what are you seeing in terms of demand? Do you have insight in terms of where we are with the level of, institutional demand? Because the thinking was that this opens the floodgate to institutional money. We know that the BlackRock ETF has hit over $20 billion.
Now the biggest.
Yep. Where would you say we are in terms of volume coming in? Are we like the floodgates opening? Are they 5% open? Are they 10% open? Is it 20%? Like how open are the floodgates where we are currently and how much more flooding is there to come, if we're going to use that metaphor?
Look, I think I have mostly good news for you. So the ETFs came live in January, and then there was a little bit of volatility as that kind of shook out. But institutions move slowly. And so yes, we keep a tight pulse on who's buying, what sizes are they buying in. And in late January, February, really what we saw was a lot of small purchases, which typically indicates that it's retail purchases coming through their brokers, their Charles Schwab's, their TD Ameritrades, et cetera, to buy that ETF. So a lot of that early demand was retail-based, which I consider good news because that means the institutional is still coming. Now the institutional is starting to come now. So why is the institutional slower? Look, coming through December, like anybody's game. I mean, you mentioned the prediction from September. There are a lot of people saying yes, a lot of people saying no about when the ETF would be approved. Institutions don't go through their processes on maybes, right? It's not like they're so desperate to get this investment that like they're gonna be there on day one as the ETF launches. So it takes them time. And the larger the institution, as you get to pension funds, et cetera, the more committees, the more process, the more evaluation that happens. So that takes months. And what happened was, as the floodgates opened, I think it was January 11th, initially that's when things started. Then pension funds are like, oh, let's start our meeting, let's pick up Bitcoin again, take another look at it, and it starts that process that takes months. And we're starting to see some of that now. There's also been a few corporate buys that we've seen announced just in the last week, like MicroStrategy type of things, where people are like, maybe I should be allocating a small portion of any large treasury into Bitcoin. So I think there's a lot more to come on the institutional and corporate side, which should spell a lot of good news for future of ETF.
Okay, so back to, quantifying that. We've just seen the trickle coming in. How much more in a number, percentage-wise, do you think we can expect?
I think we're at like 5%.
We're just at 5%.
We're at the beginning.
Okay, we're only in the beginning, and when we say institutions, we mean, the big pension funds, the big hedge funds, like the big. Who do you think is next to sort of jump in here?
So, investments are all on a scale of risk, right? And so there's certainly some number of hedge funds that are super aggressive on risk. They got into Bitcoin without even having to have an ETF. What the ETF unlocks is a set that have a lower tolerance for risk, where they don't know how to assemble all of the parts. Where are they going to source liquidity? How are they going to manage it? Who's going to do their custody, et cetera? So the ETF provides all of that in a bundle, in a package that doesn't really have any regulatory risk to them because it's been vetted by the SEC. So it opens up the conservative half. And ultimately, that does get to large pension funds, retirement funds, et cetera. That's where some of the largest pools of money in the world are, right? So there's a lot to be unlocked.
So given you were so spot on with your price forecast last time, what do you call for the end of 2024 for the price of Bitcoin?
I think we'll be somewhere around 125 to 135K.
125 to 135K by the end of 2024. And what would be driving that narrative? Is it just this demand coming in? What would be the price driver?
Well, I think there's two things. We still have the macro climate backdrop, which is constantly verifying the thesis of Bitcoin. It's not really a debate anymore that the US debt is uncontrollable. We are currently in a massive debate to figure out who is going to govern the next $10 billion of debt that we create. $10 trillion of debt that we create. It's like, who wants to drive us deepest into bankruptcy first? I steal that from Eric Voorhees, by the way.
Well, we've already $35 trillion in debt and counting,
right. And the next president is going to give us 10 trillion more, right? So the election is about who's going to spend the next trillion, 10 trillion. Anyway, that macro climate influences the idea that that Bitcoin is kind of the next gold. Look, there's not an alternative reserve currency that looks super strong. Obviously, you've got BRICS trying to eat away at the dollar demand side by doing more purchases outside of the dollar. So far, those have been relatively small scale, but that's going to continue to grow. Unfortunately, the US with sanctions controls, I'm not against the sanction controls, I'm not for it, I'm just pointing out, every time the US says, we are going to maintain power over your dollar And if you don't do what we want you to, foreign policy-wise, we're going to take it away, which is what we did to Russia badly. You can love it or hate it, but that's what we did. We put every single dollar holder on notice that we may do it to them in the future as well. And so if you don't think the Middle East is worried about that, well, you're not paying attention. So, all right, the US debt crisis is one thing. Foreign policy and sanctions controls is another. BRICS providing alternate payment systems. Frankly, digital technology providing payment systems that go across border seamlessly. We're now like, wait a minute, we don't need these financial institution gateway powerhouses to necessarily move payments between parties. So all of this is going to eat away at the dollar. That is the narrative of why Bitcoin exists. The dollar is going to get weaker. The government of the US will continue to print more. Your dollar is going down, my dollar is going down. Get off the dollar.
So a number of factors driving Bitcoin in the near term to that 125 to 135,000.
Yeah, I guess I got distracted there. Yes, on the macro climate, it's all there. And then I think also in the US, another good thing is happening for Bitcoin. Look, we got 30 to 40 million people in the US that are holding Bitcoin already. The voices are getting louder. People are getting more knowledgeable about what's going to happen to the dollar. We've got ETF vehicles that they can access it through. So just call up your broker and you've got Bitcoin. So yes, I think all of this spells more demand for Bitcoin, less demand for dollars. That means the price of Bitcoin relative to dollars goes up.
Right. And as you said, that was the impetus for the creation of Bitcoin to counter dollar or fiat debasement and devaluation, which we've seen on steroids post 2020.
Exactly right.
Okay, so, we've had a lot of conversations about Bitcoin then becoming a bigger global reserve asset, global reserve currency. You mentioned that you're seeing corporations now also start to get exposure to Bitcoin for their assets rather than treasuries or cash, and that spot ETF makes it a lot easier to do that. Do you see that trend continuing? Do you see public companies, obviously MicroStrategy, Michael Saylor led the way there. Are you seeing that trend accelerating?
Everywhere. Look, everyone knows that holding dollars is a problem. So, look, wealthy people, I think, are perceived as holding lots of dollars. They don't. They hold lots of assets. They will hold stocks, they will hold real estate, they will hold whatever they can, but they tend to try to not hold cash. Corporate treasuries that do hold a lot of cash, remember corporations have that cash as a result of having run their business, and they use that cash to operate their business, pay salaries, etc. Sometimes they amass very large fortunes. Apple, for instance, they have $1 trillion? I don't know. It's either high hundreds of billions or $1 trillion. Like, they've got a massive treasury. Well, now they've got a new problem, which is just how do you manage that? Now, they got a global business, so they need a lot of currency to manage their global business, but they've got a lot of excess cash. And of course, they want to preserve the value. What are they going to do? Do you think they're just going to sit idly by while the value of their dollar goes down relative to all kinds of other assets around the globe? No. They're going to increasingly say, you know what? Just like retail, just like individuals need to have today 3 to 5% of their portfolio allocated to Bitcoin, they're going to do it too. By the way, I don't know if you saw, Fidelity has a number of recommended, investment portfolio packages. It's the Fidelity, I've forgotten the name of the fund. We can look it up later. But they're recommending basically 3 different allocations. One is 1% to Bitcoin, one's 2% to Bitcoin. The other one's 3% to Bitcoin. Just straight up in the recommended portfolio allocation. So we're seeing that from financial experts everywhere.
Do you have a Bitcoin price target for consensus 2025, assuming that it's same time, more or less? What are we?
May next year?
End of May next year?
Look, I don't know. It'll continue to kind of march higher. It'll sometimes setbacks. That might be around the time we have a little bit of a pullback. I don't know. Maybe it'll still be around 125. I'm not sure.
This is what happens when you nailed it so correctly last time.
Look, we will see a rise in price. There will be a massive spike. Then there will be a massive crash. But for as much as it goes down, it's going to continue its general path. Remember, I think your audience probably knows this super well. But the top performing asset of the last 10 years, the last 5 years, the last 3 years, it's like always Bitcoin. And it's going to continue that trend, mainly thanks to the dollar, frankly.
Let's talk about some of the macro data that we got today. right? Because we got what? The Fed's preferred inflation measure rising 0.2% in April, core PCE up 2.8% year over year, 0.1% higher than the estimate. Assuming you go with these figures, right? And this is core PC stripping away energy and food, which is great because that's what people, really spend their money on. What do you see in terms of the Fed doing with regards to this? Now shows, like, I guess you could spin it as inflation is under control. It's at 2.8% year over year. That's discounting the fact that it's up like about 16% since the aggressive monetary and fiscal policy began. But what does this mean in terms of Fed rate cuts? What is your expectation there? Are we getting one in September? What's your outlook on what we can expect from the Fed?
Well, it's an election year, so a lot of things can happen. As you read off kind of all those stats, I mean, I'm almost wanting to curse here on camera. I don't think any of those numbers are real. Larry Summers put out a research report, I think about 3 months ago, talking about inflation and just how we keep doctoring the numbers. And it's moved into the political sphere. So whatever you're hearing on a day-to-day basis on inflation did this or did that, I don't know what it means. Here's two things that I do think matter. You remember the misery index? You've heard of this number? So the misery index is basically a combination of inflation plus the cost of borrowing money. Because the reality is that Americans borrow money. We borrow for our mortgages. We borrow for our cars. And so to not count the fact that borrowing money is more expensive today by a lot than it was 5 years ago is to not reflect the view of the consumer. So we're in an election year, and you see this stuff coming out in campaigns from the incumbents saying, oh, the economy is doing great. It's never been better, right? And they're trying to literally gaslight all of the American citizens into believing that what they're feeling is not true, right? Look, Americans are feeling pain mostly because of borrowing costs, which is mostly related to the Fed rate. And then on top of that, you've got inflation. And the inflation we know is doctored in terms of the numbers that you read. So it's even worse. Whatever you read is what the government's willing to admit. And it's only worse than that. And they didn't include the cost of borrowing. All right, so this is why we see polls from Americans that they've never been more squeezed. And yet we have political regimes that are trying to tell us the economy is doing great. So anyway, what does this mean? I guess you asked a question.
Well, do you expect the Fed to cut rates based on this data? And, yes, it's a political issue as well right before the elections.
All right, I'll predict for you because you say I'm a good predictor. But I don't know. This is a little out of my element. I would expect that, yes, we could well see a rate cut sooner than later, completely politically motivated. I mean, it seems like every day you're reading oh, we're going to forgive student debt. Oh, we're going to add $10,000 to first-time mortgage buyers. I mean, there's just all these how do I buy vote campaigns out there. And another way to do it right before the election is to cut the rates. So I would not be surprised if we see a cut. But look, the U.S. government is in a tough place. You cut those rates, yes, we're going to see more inflation. I guess they'll doctor the numbers a little bit more. And if they don't cut the rates, well, then the interest on the debt's going to go through the roof, and we got that problem there.
And rate cutting in terms of the Bitcoin picture. I mean, obviously bullish for Bitcoin.
Yeah, usually the markets react pretty positively. So the stock market will go a little higher and more people will buy Bitcoin. That's correct.
So you said, buying political sway, buying political favors with rate cuts because we're in an election year. And last time you said that political powers were keeping the spot Bitcoin ETF at bay. Seems that the consensus is that politics played a very big part with this surprise 180 with the SEC giving the green light for the spot ETH ETFs.
I mean, we can't deny it, right? I mean, we got two parties fighting against each other for power and control. They've taken different stances, and the Trump campaign came out and said, hey, we're going to be pro-crypto. And they saw very much a lot of support. And then there was a couple of things that the Republicans have been working on already with the SAB 121 repeal, and then followed by the FIT 21 market structure bill. And we saw Democrats are starting to say, wait a minute, I'm not really against this stuff. So all of a sudden, yes, we seem to be seeing something very different on the political side. And look, I mean, I really hate talking about politics with regard to Bitcoin. Bitcoin is money for the people. Frankly, if there's any party that would kind of self-identify with for the people, it's probably the Democrats. If there's any party that would identify with freedom of money, it's probably the Republicans. Both of these parties ought to be running to Bitcoin, recognizing that what's going on with the Fed is a disaster. The problem that you just described, it's not solvable. Humans are not going to get us out of this. And everyone can lie to us about the state of the economy, but we know what the state of the economy is. So, look, I think the sooner that the parties both embrace Bitcoin and digital assets, the sooner we get better innovation. We bring more assets into the US as a safe haven, a place that's going to drive digital assets for not just the US, but the world. And the sooner we get to figure out how we're going to solve our way out of this mess, this debt crisis that we're in.
Well, it is a bit disconcerting that the SEC was firmly against this spot ETH ETF. It certainly wasn't looking like it was going to give it an approval. And then one can speculate that Gary Gensler or someone at the SEC got a phone call saying, we're losing the crypto voters, turn this around now, because the SEC is supposed to be neutral. It's not supposed to be politically motivated. And, you know, you're saying we're questioning inflation numbers. This sort of feeds into this theme of government and regulatory bodies distrust, right?
Absolutely. I think it's getting more public and more visible to everybody. Look, I've been in the crypto space for 10 years, paying attention to this stuff on a day in and day out basis. And we see it. And sometimes, you know, I talk to friends and family outside of the industry, and they don't necessarily see it. But we saw years ago, 2020, we had an OCC, that's the Office of the Comptroller of the Currency. This is a guy that manages and regulates all of the big banks in the United States. Say, hey, we would like the big banks to be able to start managing digital assets, Bitcoin, etc. And that happened just at the end of the Trump administration. I'm not trying to be favoritism towards one or the other. That was under the regulations of the land, which are set by the legislation of the land. And those rules are supposed to be consistent regardless of who sits in the Oval Office. The only thing that changed was we went from one administration to another. And they, of course, bring in their set of head regulators. And all of a sudden, even though the laws did not change at all, even though the regulations as written did not change at all, the interpretation of those regulations flipped night and day. And it went from, yes, we support crypto, to no, we don't support crypto. So, look, one of the great things about America is that it's always been a place for freedom and innovation and business to grow. In order for business to grow, we need to know what the rules are. Yeah. And we need those rules to be consistent. Now, if the legislators, if Congress comes in and changes the rules, all of us here in America, we are absolutely here and ready to abide by those new rules. But that's not what happened. The rules did not change. The regulations did not change. The President of the United States only changed. And this is not supposed to be a dictatorship, a monarchy, or anything like that, and yet it was. So, those of us in the crypto industry have seen the politicization of regulation for quite some time, and we've been screaming about it, and people haven't quite felt it. But now, all of a sudden, this reversal of opinion on ETFs has been very public. Yeah. It's been in the news for all of mainstream America, and everybody looks at it and says, wait a minute, that seems like it was kind of political. So, you know, combine that with the other political things that are happening. And I think, unfortunately, as the US economy moves more towards a rickety basis, and you hear this from great experts, I'll mention Larry Summers again, Ray Dalio again, people are calling for there could be some extreme things happening in the United States, all the way to potentially civil war. I'm not sure I agree with that statement, I think it's a little too colored, but as the US gets a little bit more rickety due to its debt position, inability to control inflation, things are going to get worse. The politicians, unfortunately, are each trying to get elected and maintain their power. They will tell us the story that best gets them elected.
And waning trust in institutions, declining trust in government institutions, as we've just seen, with the SEC, which we now have confirmation in a way that politics is playing a part. It's perhaps and
it's right in mainstream America.
And perhaps it's in the favor of the crypto sector right now with this decision, but you have to wonder how much of it was against the crypto sector or other sectors before, like with Operation Choke Point 2.0, where we were speculating that the on-ramps into the crypto industry were being blocked by, other bodies. So it's disconcerting where we're seeing clear evidence of political manipulation, or what appears to be clear evidence of political manipulation.
Well, what I was trying to say is that as the U.S. economy struggles more, gets more rickety, it's going to get increasingly obvious that there's political tampering. Operation Choke Point 2.0 absolutely was real. Crypto companies saw it, we felt it, we lived it, we complained about it, but because it was a little bit more behind the scenes, the rest of the world's kind of like, is it real? I'm not sure. But with this one, everybody sees it, it's right in plain sight.
Well, it is a reality now. Whatever the motivations, we have the green light for the spot ETH ETFs. Expecting these to launch around July, I believe. What is your expectations there? What are you hearing in terms of BitGo having a custodian role in these spot ETH ETFs?
I'll go ahead and predict that I think the ETFs are going to take a little longer for Ethereum to get fully approved, but I do think they will get approved. I think
What kind of timeline?
Maybe the second half of this year instead of July. But I think they will come through. And I think you can't really put that genie back in the bottle. And then absolutely, BitGo has got a role on day one. You'll see us listed with a number of the ETFs.
Have you finalized anything with any of the issuers that you can share with us?
I'm not going to share, but yes, we have finalized many things with some of the issuers. Yes.
Well, I have to ask, Mike. So nothing that you can disclose yet, but you're anticipating by the end of 2024?
Yeah, I would say probably like Q4. We'll see some. I think at that point we might see it. Yeah.
Okay. Well, like I said, you've been right before, so I have to then ask what
it can only get worse.
What do you think this means then in terms of ETH price?
I think it'll help the Ethereum price. Look, Ethereum is so different from Bitcoin, and I'm very excited about Ethereum. I'm excited about Ethereum because it's a smart contract programming platform, which allows us to start taking financial institution activity and putting it into computer code that everyone can verify. That is so powerful. But that's very different than the store of value or payment system. And I don't really see Ethereum as being a very great store of value or payment system relative to other types of products that you can buy. So putting it into an ETF, I think it does allow some hedge funds and others to bet on the building of that smart contract ecosystem, community, whatever you want to call it. But I think it's going to be quite different than Bitcoin, and I would not be surprised if we see different patterns of growth on the Ethereum ETF to the Bitcoin ETF.
Well, let's unpack that. I mean, one of the things that was driving the Bitcoin spot ETF is that we had a pretty clear narrative, at least in terms of mainstream, that the message is that Bitcoin is gold 2.0 store of value asset, right? What is the messaging with ETH?
It's the place where that you build applications on top of a blockchain.
But if you were to simplify that for a retail investor, like retail investor understands, store of value, digital gold.
So we all work with broker dealers to buy our stocks, right? And broker dealing is a highly regulated activity, and it's involving humans. And if you go and look at a broker dealer, in addition to their license, they have to have personnel that have all been licensed as Series 63s and Series 7s, et cetera, for what they do within that broker dealer. And every single message those broker dealers ever send to one of their clients is monitored. Every year, all of that stuff is looked at. Why? Right? Surely there's an honest broker out there where you don't have to constantly watch him. Well, it turns out people change. At 25, you might have been a very honest and well-respected and good early young stockbroker. And at 45, you might have a bunch of debt and you might make a terrible choice to rip somebody off. So you have to monitor them their entire lives. Now, if you take that stockbroker and you put him into a smart contract, that smart contract is going to give you a fair price. Or if it's not a fair price, it'll give you a consistent price under a set of rules that don't change, that operate the same today and 10 years from now. So we can take the entire functionality of large swaths of the financial system and put it into smart contracts that run transparently, that run fairly, and don't need to be monitored for every message they send because they just operate the same every day. So anyway, Ethereum, Solana, Aptos, Sui, all of these guys are building platforms where you can run those types of products.
back to the specifics of this ETH ETF approval, it is not staked ETH. And that's where the yield comes from, where we use the validation process in order to create yield for this in the process, right? So how do you see that working out when we have some ETH that is going to be staked and providing a yield and some locked up in these spot ETH ETFs that isn't?
Well, the first thing you got to remember is that staking rewards are actually not yield, it's inflation. And it's actually different. If everybody that holds Ethereum stakes together, then what happens is everybody gets inflated together, devalued together, and your relative ownership of Ethereum remains unchanged. The advantage of staking when someone else is not is that you're getting the validation rewards to you while somebody else is not. And so their value is going down relative to yours. So when you think about the Ethereum ETF and the fact that it's not allowed to stake, by definition, it is not going to be keeping up. It is going to be getting devalued by all of those that hold ETH and do stake it. So that's an interesting conundrum. And today already you see in DeFi markets, the value of staked Ether that is used as collateral is given a different reward than unstaked Ether used for the same purpose. And that's because one can get a yield and the other one can't.
So does that mean we could have two classes of ETH with two different price points? That
It's probably going to vary by just about the staking reward, yes.
So ETH in a spot ETH ETF would be less by dollar price terms than non-spot ETH ETF ETH, which is keeping up with inflation, which is staking and creating yield. So we could see two classes of Ethereum.
For sure.
Well, that would be very interesting in terms of
this
pricing.
Is gonna play out. I mean, this is great. Like, you don't get very many opportunities to see markets at work where these types of things really shake out and they'll be visible. So I think when the ETF launches, you'll go through some amount of instability, but as it gets to some relative size and steady state, yes, I think you're going to see two different prices.
What would the difference be, do you think?
I think it's going to be probably somewhere around 3.5% to 4%. So the the staking reward is 4.7-ish% with MEV. And then you'll get not quite all of that as a price difference.
So two classes of ETH potentially. Let's talk about then your price forecast specifically for ETH. When do you anticipate a new all-time high?
For Ether?
Yeah.
Look, I think all of the digital assets are still tracking each other. So I think you just track Bitcoin and you more or less see similars for the good assets. Good is a subjective term. There's a number of younger, let's call them less mature coins that haven't achieved critical mass, kind of as building an ecosystem or a set of applications around them. They will continue to fade. In general, there's a lot of experiments happening. 95% of them are going to die over time. The only thing worse than going broke, by the way, is going broke slowly. It's very deceiving, but you do see it in digital assets. You see some assets that are out there, and just over time, and it can take a long time. It can take years. But anyway, I think Ether will more or less track Bitcoin.
So we're saying a new all-time high for Bitcoin, you said by the end of 2024.
Yeah. So same for Ether.
All right. We'll see how you do with that one. One thing that we have seen in terms of, you say, coins coming and going, is we have seen this like celebrity meme coin explosion happening. Because you tweeted about it. What did you say? A fool and his money are soon parted. Yes. About meme coins. Well, we've got Caitlyn Jenner with a meme coin. Yes. Izzy Agalia, a whole bunch of celebrities coming out with meme coins on Solana. Davido, some Nigerian singer. Is this a negative in that it could indicate like too much exuberance, too much frothiness in the market? How do you view the celebrity meme coin explosion right now? Well,
look, selfishly, the part that bothers me is that I don't consider these to be serious, and yet they confuse people. So digital assets are a fundamental shift in how we can think about all kinds of financial products and money. And that's complicated. And we haven't figured out the right market structure. We're not done figuring out how to make this available to everybody. And when you have these meme coins and other things, people associate them together even though they really have no relation. And I understand that meme coins can run on top of Ethereum, which I think is a serious platform, but meme coins are a joke. Dogecoin is a joke.
Elon Musk may disagree with you.
Hey, look, humor has value, right? So Dogecoin will forever have value. People will come into digital assets and they'll look at that Shiba Inu or whatever the dog is, and they say that's funny. And they don't know if it's Dogecoin or Dogecoin. And so for that reason, it will have value. But it's not in the same camp as a Bitcoin value store. It's not in the same camp as an application platform for decentralized finance. So unfortunately, the meme coins confuse people. There's going to be people get cons. There's a lot of people that love it. It's like a sport. It's like going to the casino. Hey, if you like going to the casino and seeing if you can spin a doggy or a Caitlyn Jenner coin or whatever, like great. Okay, so you went and gambled, but that doesn't have anything to do with what we're trying to do with digital asset finance.
So no Mike Belshe meme coin anywhere on the horizon.
You know, anybody can launch anything. I will not launch it. I promise you that. But yeah, I don't have a lot of interest in.
All right, Mike, as we need to start to wrap up here, final thoughts. What is your strongest point of conviction in terms of where you see the crypto industry by consensus 2025?
Okay, look, I think we're going to see a much better regulatory climate in the US. I know that people think that, and I do think that it's aligned with, unfortunately, who's in the Oval Office. So I guess you can predict who I think is going to be in the Oval Office. But
Wait. So better regulatory environment, does that mean you predict a Republican in the Oval Office? And does that mean you predict a Trump presidential victory?
I'm going to avoid saying the parties' names. But no, I think we are going to continue to see better climate for digital assets in America. You know who's promoting that already. I'm indirectly answering your question, I guess.
Take that as yes.
Being
okay.
snide or something. But that's good, right? Actually, that's going to help. And I think making the U.S. a good place for digital assets is going to be tremendous value to America. So I think we'll see that by next year. I think we're going to start to see another trend, which is the early days of digital assets are all about decentralization, which is really about power to people, individual freedoms and things like that. Part of growing to the state we're in is about growing towards some of the centralized things. BitGo is largely known for being a centralized custodian, and yet that's not our roots. We started 100% non-custodial. We still offer all of our non-custodial products, and still it remains about half of our business. It turns out that when it comes to managing other people's money, like it happens at hedge funds and businesses, et cetera, well, you need to use banks because you don't want some IT guy that's operating at the company to be holding the keys. And so you use banks for that. That allows you to get auditability, safety, robustness in case the management team changes and things like that. So we need some of that centralization. But I think we're also going to see by next year more movement back to decentralization in terms of better offerings, both for individuals but also for institutions. BitGo's built 7 custodians around the world. Trust me, it was never my dream to be regulated by 7 different jurisdictions around the world. But what can we do with that? We can start to put keys all over the planet. We can start to overlay custody not as a regional service, but as a global service.
Okay.
And this provides protection to people all around the world, regardless of what nationality they may be. It also allows us to connect people that want to trade from Europe to the US without having exposure to the US, or Americans that want to trade in South America without having exposure to South America. That's what's going to get built. End of 2025, we will see that fully launched.
All right, a shift back to decentralization in a way. Mike, I can't wait to catch up with you again, see if your forecasts were as correct this time as they were last time. This is what happens when you set a record. Have to keep that up. But thank you so much for sharing your thoughts with us today. Appreciate it.
Always a pleasure, Michelle.
All right, thank you.
Kitco News special coverage of Consensus 2024 is brought to you by Diamond Standard.